Hello everyone, this is Daniel Martins with the Apple Maven, and today is August 19th. It's a Wednesday, and it has been an important day for Apple. According to the news sites, Apple has reached the $2 trillion valuation as of this morning. The market has not closed yet, so I don't know for a fact whether Apple will hang on to the $2 trillion valuation, but it has breached that level at least for a few minutes this Wednesday. Now, something very interesting about this milestone is the fact that Apple went from $1 trillion in market cap as recently as September 2019. And then, of course, you all know what happened between then and now. In only 11 months, we had the COVID-19 crisis, which has been highly disruptive to stocks in general. And even through that crisis, Apple was able to basically double its value from $1 trillion to $2 trillion in less than, or just about 11 months. So it's been very impressive. A couple of the factors that I believe have led to Apple shares climbing to $2 trillion. One of them is the fact that the services segment has grown and actually exceeded management's expectation. So if you take a step back, you remember that Tim Cook and the executive team had a target of doubling services revenues from 2016 to 2020. And that happened a little bit faster than originally predicted. And that's a good sign because services tend to carry or allow Apple stock to carry higher valuations for a couple of reasons. Services, they usually have better margins, their revenues are more predictable, and for those reasons, the value of Apple stock has risen over the past 12 to 24 months. Now, that's not the only reason why. There are a couple other things that happened in the past several months. One of them is the fact that the wearable segment has also grown, in my opinion, well beyond where most people would have expected. So the Apple Watch is actually by far the most dominant product in the smartwatch market. So Apple controls about half of the global market in smartwatches. And even the AirPod, which some might have thought wouldn't have been a large product category maybe a couple of years ago, but the AirPod has been very successful, especially with the introduction of AirPod Pro last year. So services, wearables, those are two very important pieces of the story. The other one that I would point out is iPhone. So the iPhone has been a mature product category for a while now. Apple is not really finding a whole lot of growth opportunities within the iPhone. However, the technology transition from 4G to 5G started to take shape pretty much last year when some of Apple's competitors, including Samsung, Huawei, and some others, began to introduce their 5G devices. Now, Apple hasn't done it yet. The expectation is that the Cupertino company will do it later this year, around October of 2020. However, the expectation that Apple would introduce the 5G model and that those new devices would basically trigger a wave of smartphone upgrades was probably enough to send valuations higher and to kind of inject some optimism into analysts and investors about the iPhone. Now, that's basically what drove the stock from $1 trillion to $2 trillion. Now, the question that investors might have in their minds now is basically what's going to happen next. So just for reference, this doubling of market cap in just about 11 months has been the fastest rise of this magnitude in just about the past 10 years. The last time that it happened was back in 2009, 2010. Now, you have to think about how different things were back about 10 years ago. So first of all, the economy in general was recovering. The markets were recovering from the bottom of the Great Recession. So that item alone is enough to kind of justify why Apple shares would have climbed so fast about 10 years ago. But then, of course, a couple more things. So the iPhone, which is a huge category today and a huge driver of revenues, was a pretty new segment. It had been around for only about 3 years back then, 2 to 3 years. And then, of course, the iPad, which is basically the invention of the tablet, happened in 2010. So those were the things that were happening. Those were very important years in Apple's history. And that was the last time that we saw shares climb this fast by, more than 100%. So the question is, can Apple shares continue to climb? And of course, that's going to be a very tough question to answer. There are a lot of things to consider. And of course, if you hear the bull case and the bear case, you can probably find very good arguments to support both theses. However, if you look at history, and I think it's kind of important to just take a look at how shares have behaved in the past. And what you see is that after a very strong rally, Apple shares don't necessarily correct. Now, it can happen. It has happened several times before where the stock rallied and then it pulled back after reaching these levels. But that's not necessarily the case. We have also seen the opposite, where shares continue to climb to reach even higher heights. Now, what has been kind of rare is a stagnant or a plateauing of share price. So usually when Apple stock rushes to basically double within several months, hardly ever does it just stay there and sit there. So either you have a pullback or you have momentum carried forward. Now, of course, it's hard to tell which one is going to happen, so we're going to have to wait and find out. So that's all I had for you today, and I hope you keep following the Apple Maven. So visit thestreet.com/Apple and be sure to leave your comment there, and I'll be glad to engage with you. Thank you so much.